We've got these worrisome headlines out of Israel, also out of Washington, D.C., a little bit of positivity. What have traders got to do with all of this? Going into the weekend, are they short? Are they neutral? Let's ask three superstar traders at the New York Stock Exchange, CME Group, and the NYMEX. Doreen, notice I didn't say long because I figured knowing you probably wouldn't be long. But tell me, surprise me. I don't know. What are you doing going into this weekend? What are you seeing your clients doing?
I think a lot of people, after the leaders of both parties were out there very optimistically talking about the possibility of a deal, I think people covered any shorts that they might have had going into the weekend because on the off chance, and in my opinion it is an off chance, that they come up with something between now and Monday. You know, they don't want to go be short this market, I don't think, because I think a deal, we get a rally on a deal.
Yeah, and Larry, next week is Thanksgiving, so do they try and manage to get something done before Thanksgiving? No way, right?
I don't think so. I don't think so.
Larry, what do you think?
No, I don't think so. They're not going to get anything done right away. It's going to be more horse trading, more back and forth. And we know that Obama does have the leverage, and he knows it too. But the fact is, we do need to stay near normal valuations. I mean, the S&P 500 right now is trading at a multiple of 12.5%. I mean, that is really on the cheap side of history. And I think the market's pricing in any type of failed negotiations. But when you look at implied volatility across the board, it's saying something will get done, but not by Thanksgiving. No way.
Does this surprise you guys? Because we've got these multiple macro overhead clouds that look so bad, and yet we've got a cheaper stock market. There are opportunities here, Doreen.
Oh, yeah. No, I think there are always going to be opportunities. I think that. Are you talking to me? I'm sorry, Liz. I can't hear. Okay. Yeah, no. There's always opportunities, obviously. But I think covering the shorts is probably going to be one of them. Going a little bit longer here, if things look optimistic, is good. But, you know, I think we've got a lot of problems, a lot of headwinds. Aside from the fiscal cliff, we've got tensions in the Middle East, which I think are probably outside of the fiscal cliff. That's my biggest concern, and I think we have to see how that goes over the weekend.
Well, let's segue to Alan Harry over at the NYMEX. Perfect discussion here, and we do have these issues. We've got rockets being launched into Tel Aviv, hitting civilians. We've got the Israelis retaliating. I mean, you don't get hit by hundreds of rockets and not retaliate in Israel. That's the way they do it. What do you think happens here as we see the entire energy complex higher?
Well, what I'm looking for right now in crude oil is to settle above $87. We didn't get that today. We came close, but we didn't get it. We do have tensions in the Middle East. I don't think it has a big impact, though, on the supply system for crude oil. So what that means is that it won't really get us that upside, but we get things taken care of in this country, and we don't have as much problems with the European debt, and crude oil does rally. Right now, the market does seem bullish. So what I'm looking for is a settlement above 87, and I'm going to start to buy.
12 cents away. We'll see what happens. We'll see what we can do for you, Alan. Listen, thanks all of you. Have a good weekend. We appreciate you joining us on the Floor Show anytime.